Good morning, Facebook, and happy Friday. I'm Joe Malandrino, Global Markets Reporter at Nasdaq, and joining me today all the way up from Florida is Adam Sarhan of 50 Park Investments. Thank you so much for finally making it to the Nasdaq with me.
Thank you for having me.
So let's talk a little bit about 50 Park Investments.
Sure. So 50 Park Investments is an investment advisory firm, and we help people do two things. We help people make sense of markets and then make money navigating both bull and bear markets.
Right. Well, it's really interesting because your investment process doesn't incorporate just fundamental and technical analysis. You have a third analysis to add into the mix.
Right. So I'm a self-made student of markets. I love markets. I'm passionate about it. I light up about markets. The other thing behind markets is psychology. I love to learn what makes people tick, pardon the pun. So what happens is, after studying fundamental analysis, technical analysis, both schools of camp, they kind of like butt heads against.
Like the chicken before the egg argument.
Exactly.
Yeah.
So what happens is that something's missing. How many times have you seen a stock with very strong fundamentals go straight down, or very strong technicals break out, beautiful volume, beautiful everything, and then fail, or vice versa? Crummy fundamentals, crummy technicals go straight up. So after years and years and years of studying and reading everything under the sun, attending seminars, all that fun stuff, I got to the point where I said, okay, something's missing. So one of my other passions is psychology. I invented this term, or coined the term, called psychological analysis for markets. So in addition to technical and fundamental analysis, I use something called psychological analysis. And basically the premise is that price is a function of perception. What do market participants perceive value to be? Future growth.
Right.
So with earnings season, which we're in now, which I'm sure we'll get to, the big thing with earnings, it's a rear view mirror phenomenon. It tells you what already happened in the past, not what happens going forward. So lots of times you see stocks gap up big or gap down big on earnings, and you're left scratching your head. What does that mean? Or why did it gap up if the numbers were strong or the numbers were weak? Something else is missing, and that's where that whole psychological analysis comes into play.
Well, what do you think about the market right now? And speaking of value, because there's that argument, oh, are we overvalued? It's a much different market than it was in '99 and 2000 when the Nasdaq was at the levels that we're at now. In fact, well, I mean
we're at.
We're at, right?
Right.
Is the market overvalued?
Sure. So what's happening now, the massive game changer, which people are having a very difficult time sinking their teeth in or wrapping their arms around, is that interest rates have been at zero for 8 years. It's the longest time in history, number one. Number two, central banks around the world have distorted markets. And it's not just the stock market. If you look at the global macro environment, stocks, bonds, currencies, and commodities, the environment has been wacky, for lack of a better word, right? So we're in this environment now. We're in an 8-year bull market for stocks. It's obviously an aging bull market. We study history and study markets, and that's how we built our business. So if you study every bull and bear market in history, has one thing in common: a definitive beginning and a definitive end. So this bull market eventually will end. No one knows when it will, but right now we're in the climactic phase, or in the latter phases of a bull market. It reminds me of 1929 and 1999, where you have this euphoria comes into place. People have this panic buying shows up, where they buy first, ask questions later. Valuations out the door. GDP slowest reading today in 3 years. Doesn't matter, buy stocks. Why? Interest rates are at zero. Central banks are very accommodative. Easy money is trumping everything else, for lack of a better word.
Right. But I feel like people have been saying that for the past 2 to 3 years, though, and the market just continues to move higher. But perhaps these are the valuations with the economy and the type of market that we're trading with now. I mean, for example, you look at Amazon, you look at a Google, not Google as much, but in Amazon, and you try to wrap your head around the valuation, but this is just the type of environment we're in right now. We are in an on-demand environment, and Amazon satisfies that need.
Right. Specifically with Amazon earnings, they just came out today. Stocks reacting well to earnings. So now why does this matter?
Well, they beat huge.
They beat huge, number one. Number two, if you look at the landscape in the economy on Main Street instead of Wall Street, the retail industry is getting decimated.
Right.
And it's been that way for the last few years, right? Stores are closing at record numbers. Stores are going out of business. It's just, the environment is completely changing. Now, who's benefiting from all of that closure? Amazon. Why? Because instead of walking into a store and buying a widget, whether it's TV, a phone, whatever, it doesn't matter, right? Whatever it is that you're physically buying, you can go on Amazon and do it cheaper, faster, it's more convenient, and lots of times you don't even have to carry the merchandise because they're going to ship it right to your door.
Right.
So let's say you want to buy a big shopping cart worth of items at the store, right? So you traditionally you go to Target or a Walmart, the everyday family, every day just walking around. Okay, let's load up the cart and then take all that stuff, put it in the car, stuck in traffic, wait on lines in the store, go back home. You can now click a mouse, order whatever you want, and you're done.
We also have the software business as well.
Exactly.
So, I mean, I feel like companies like in Alphabet, like in Amazon.com, they're not just a tech company, they're consumer companies as well. I mean, you can even make the argument for Apple, but if you think we're getting a bit toppy, and we're also not in the business of market timing because no one ever wins at that game, what do you like? What would you be getting out of and perhaps moving into another sector or a different asset class?
Sure. So for me, what I do at 50 Park is I have a very, very, very strong focus on leading stocks. Actually, we have a research note called Find Leading Stocks, right? So that's what we do, is we help investors focus on leadership.
And you guys have had Amazon in the portfolio.
Absolutely.
Yeah.
We've had Amazon, Google, Facebook, Netflix, Apple. I mean, by definition, any stock that's leading is going to show up in our universe.
All the Nasdaq listed stocks.
Exactly, all the Nasdaq listed stocks, and Nasdaq's a new all-time high. And just to be clear about the top call, I'm not saying that market's topping out by any way, shape, or form.
Okay.
All I'm just saying is that we're cognizant of the fact that we're in the latter stages of a bull market, and we're getting closer to the top. We're not topping out in any way, shape, or form right now, but when you get to the point where you get that irrational exuberance that Greenspan talked about way back years ago in the 90s, and you get a similar situation where it's beginning to show signs of let's buy, and just buy, and everybody buys, all of a sudden you run out of buyers, like a game of musical chairs.
Right.
And then all of a sudden the floor drops, and that's how tops form. I'm not saying that we're done, we're topping out. All I'm just saying is that we're in the latter stages of a bull market. It could last for a few more years.
Right.
Valuations, overbought markets can get a lot more overbought before the music finally stops.
Right. Well, I mean, it's been really frustrating for people that are either buying vol or trying to short this market because if one word defines this market, it's been momentum.
Absolutely.
It really has been, and you can't fight that.
Yeah. There's an old expression: if you fight the tape, you're done. Right? Don't fight the tape.
Right.
So at the end of every note that I write, I say always keep your losses small and don't fight the tape. That's my saying, right? So I live by that mantra, where the market is number one, the market's right, because you can buy and sell right now based on this price, and then my job is to align myself with what is actually happening. I care about what is happening, not why something is happening or why somebody thinks something is happening.
Right.
What I care about is what is actually happening, because that's the real world. That's where we can make transactions, and all of us make money or lose money.
Well, price action trumps all. There's that word again. But to wrap this up, are you surprised about the lack of vol in this market? Because there are a lot of outliers in there, from policy to geopolitics to overvaluation in the market. I mean, the VIX was at a 10 handle again this week.
It's unbelievable. So what's happening now, again, that distortion on the macro standpoint, it's not just with the vol, but it's across the landscape. What's happening now, what I said, one of my other sayings in markets, it's not the news that matters, it's how markets react to the news. And right now, with no vol, even in the face of Trump coming out last night, President Trump saying we might go to war with North Korea, and the market's not reacting, and the VIX is at that's why for me, it's the reaction that matters more. What is actually happening? Eventually that changes. And then when stocks stop going up, and even you have bullish news and markets aren't going higher anymore, all of a sudden the game changes.
Right.
So that's where we're in a situation now where we respect the fact that we're in a bull market. Valuations can continue to stretch for a longer period of time. Vol can remain compressed for a longer period of time, but just remain cognizant of the fact that it doesn't last forever.
Right. But it is what it is till it isn't anymore.
Absolutely.
All right.
Very well said.
Well, thank you very much, Adam, for joining us at the Nasdaq. We hope to have you back soon.
Thank you.
And thank you, Facebook, as always, for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.